Okay, now we're looking at the next assignment, which is titled Financial Statements of the Sole Proprietorship. This is the next statement we're looking at, called the Statement of Changes in Owner's Equity. We've already looked at the income statement, and this is our next one. So it says to create a financial statement called Statement of Changes in Owner's Equity that includes the information below. And we're going to solve this using the table. So Mr. Jose is running the retail stationery shop, and his capital on March 1st, 2000, this should be 10, is $10,000. He introduced additional capital of $2,000 on March 5th, and his net income from March 2005 is $3,000. So in this case, we've already done our income statement, so that's how we got this information right here. And then our withdrawals are $4,000. So to prepare our statement, you first need to put in your heading. So our heading is going to be called, we always start with the business name, and since it doesn't come out and tell us exactly what the business name is, we're going to go with what we know. So we know it's Mr. Jose's Retail Stationery Shop. Okay, and then the next line is always the type of statement we are creating. And this would be a statement of changes in owner's equity. And the last line is always the time period we're covering. So this is going to be, let's see, doing the month of March. So, and why didn't that say? We're talking about the month of March, so we're saying for the month ended March 31st, 2010. Okay, so there's our heading. Always make sure, I've done your heading for you a couple times. Make sure you add in the proper information for the heading. Okay, next step is to fill out our amounts in these two columns. So the first line is always going to be our beginning capital, our capital at the beginning of the month, and which up here it tells us on March 1st his capital was $10,000. So we copy that amount down into this right column. When you're trying to decide whether or not you should be using the right or left columns, just keep in mind the left column we always use when we're going to add up some totals, and then the right column is where we put those totals. Okay, so if we have our total amount for capital, $10,000, we're going to go ahead and put it over here into the right column. With net income and investment, so now we want to add in the increases of our owner's equity. So this says that he introduced additional capital of $2,000 on March 5th. So he did an additional investment of $2,000, and we had a net income from our income statement of $3,000. So we add that in here too, because net income increases our overall capital. So then we draw our single rule line saying, okay, we're going to add up these two numbers now, and then we write our total over here back in the right column. Okay, and then we want to get a subtotal of our totals and add that here. Okay, so that's the subtotal of our investments plus our original capital at the beginning of the month. So now we want to subtract what we've withdrawn. That's what this less means here. Less means to subtract. So we're going to subtract the withdrawals that were made by the owner. So this tells us up here in our little scenario that his withdrawals totaled $4,000. Okay, and then so that has a total decrease of capital of $4,000. All right, so now we need to take our subtotal. We need to look at the subtotal of our increases plus our owner's capital and then minus out our total withdrawals. Okay, and then that's going to give you your ending capital for March 31st.